What's up, guys? I've been on holiday on the road, Christmas to England actually. So I haven't done a video in a few days. I really wanted to, and here I am on a little laptop without all my usual media applications. So it'll be a bit different, the format today. But who cares about all that? The content, the S&P, you can see it is curling. It's found some temporary support down here, albeit with a bit of a crazy Thursday. We'll get to that later, especially with the Nasdaq. It's really a Nasdaq related day to talk about. But yeah, S&P sideways. I'm still bearish, obviously bearish the whole time. I think we could move high. I'm not sure actually what to expect today. I haven't followed the markets too much. Obviously, we had a strong close in the last trading day, which was Friday. So close at higher day, so you expect a bit more follow through, maybe some resistance here, right? 387, which is prior immediate resistance. If we do go higher, maybe prior support could act as resistance. Quite hard to call exactly where that would be. I would say 395-ish, maybe even a bit before. So basically where this target has been for some time. So that was support target. It's now resistance target. So yeah, let's see. I would sort of suggest, yeah, like I said, 387 and then a bit higher, 394. Let's call it, those kind of areas. Resistance on the way up for the S&P. On the way down, support. We already have it marked actually. So I'll leave it as it is. This is basically just finding temporary support in the middle of no man's land, probably because of other indices. Now looking at the Nasdaq. The Nasdaq, I think I called this ascending support perfectly. So we touched it, we kissed it here. Next day we confirmed it by sort of testing the lows and closing within the ascending, and then we had this nice bounce day. So if you use this target, this ascending support as a bounce trade, you would have made a nice move out of that. Quick gains, but then the next day, boom, go down to another level. So the Nasdaq was exceptionally weaker compared to, I think, all the indices actually, even the Russell. I mean, the Nasdaq's been weaker on the way up, weaker on the way down, so it doesn't surprise us too much. But it was even weaker than the Russell. And I think Tesla, we'll get to Tesla later maybe. Tesla's very weak. I mean, I would say now you can play that as a bounce. That the RSI is really weak on that. That's oversold in my opinion. I didn't expect it to take out an entire new level of support, which is probably why this candle affected the Nasdaq the most. I didn't follow that too much, but we'll get to that. Anyway, the Nasdaq trying to curl, finding difficulty compared to the other indices. So I think the resistance on the way up, I don't think it'll get all the way up here. Probably here. It'd be hard to take out this bounce high, right? Imagine just bouncing. Is it really going to go straight through there? Probably not. So I'd make this a resistance, and I'll move this one here in case there's several days and it goes higher. I mean, if it goes even higher than that, which I really doubt, obviously the descending line will act as resistance as it has for several months. So I won't need to, well, I might as well just do it, So there you've really got everything. And this one we can delete now because it is obsolete, even though it worked perfectly. So yeah, those are the support and resistance I see for the Nasdaq. Again, it's the weaker one, it's the most troubled one, and who knows, the markets could go lower straight away. I mean, I expect them to go lower, but it could happen straight away too. So those are support and resistance on the Nasdaq. The Dow Jones still very strong. It did end up being extra weak on the way down at some point, one of these days, but it did find some strength already, and here you can see it's curling off the descending resistance. And now, to be honest, if it bounces any more, if there's any continuation, and again that Friday would close at higher day, so we could get a little follow through at least. And if there is a little follow through, it's immediately back in the zone where it was sort of chopping at the high. So, but I still think immediate support, and these are too big. I need to make them smaller at some point. Immediate resistance will be that high, that Wednesday high, which is pretty soon. It also is the support of this choppy area, so it definitely is resistance. And then if it goes any higher, to be honest, I would probably judge it on other indices because we're already reaching the high. So for me, we have a bit of a obvious. I should have drawn this for the others, but we're basically there. The Dow, you have to watch the Dow. It's very still very bullish. We really needed to flush this zone here, the lows, to get to the next. And once we get here, then it starts to look like, okay, I can imagine a scenario where we test the lows in the Dow. But I suspect that if we're here on the Dow, we're pretty much at the lows. In the Nasdaq, you know, we'd probably be all the way down here at the 253 area. Looking at the and same for the Russell, you know, we'd be down here 162 with the Russell if the Dow's testing that area. But the Russell, a bit like the Nasdaq, although it found sort of more stable support, you know, it didn't flush to the next level, not exactly anyway. So here we are, you know, kind of trying to reclaim this support zone. Again, immediate resistance will be that Wednesday high of day. If we take that out, which, I mean, whatever, it could happen, but I don't think it changes the grand thesis of everything just rolling over. If we do take this out, we could get to prior support, call it 180. It's a nice psychological number, but it's not too obvious where it would really touch and go down from there. It's, you know, it could go even higher, 182. It really depends on several markets, I suppose. You know, the dollar, the interest rates, maybe foreign markets. There could be fundamental news, geopolitical news. So I don't want to be too precise, but you know, I can be precise on this point here. So the Wednesday high, the high of the bounce for all the markets, that will be resistance. And then from there we see on the way down, I think the markets or the market is already in place. So let's call it 168, and then low of area 162-ish. So I think we could have a small bounce. This Santa Claus rally that everyone talks about, you know, for me, didn't buy it. I think we could have a small bounce, but you know, 2%, but that's it. And then basically down again. So I don't know if you want to be brave and ultra short term and try and trade a bounce here, but I think you've got to be a little bit more zoomed out. And I like my day trading. I like my 1 minute candlesticks too, but I think it's a bit too risky to trade a bounce for too long. Looking at the VIX, I mean, the VIX is just broken. I shouldn't even cover it anymore. I think it's a buy because I think the markets are going lower, and in addition, because I think the VIX is relatively oversold. So yeah, if we're looking at the interest rates here, the 1 year, you know, I still think we're going to get a breakout here with the 1 year going higher. So the 1 year was actually quite weak down here, but it's getting stronger. The 2 years broken out of this descending line. So I'm looking for, I mean, this is pretty significant actually. Looking for a move back up to here. Let's call it 4.5%. Very significant actually, the 2 year breaking out of there. So it was a little bit bearish down here when we were testing the lows, and the 1 year was close to breaking its neckline here, this support. But we held and we actually moved a bit higher. So now I'm very confident that we move higher in even the short term rates. 5 year even stronger. We already broke out of the descending line. Went over this already. The 10 year already broke out. I call the next support around 3.9. 30 year, yeah, we're going to be testing the strategic descending line. So very bullish on the interest rates, I would say. If we look at the Germans, very strong. This is very, very telling stuff. We're going to new highs. I mean, just by looking at the European interest rates, you can tell we're going to be testing the highs in the American interest rates. We're just a bit behind. Yeah, the British also are a bit behind, maybe even more so than the Americans, but interest rates are very, very significant again now. Let's look at the dollar. Still weak. That's behind interest rates, but I still expect a breakout of this descending line. I also expect 103 to still hold. Looking at FX, I still don't think that the euro dollar will take out 107 and go higher. I think the high is in. The Japanese yen is harder to call because that was quite specific to Japan. So far this support zone has held. I still think this descending line will act as resistance, but we're looking to break out of that. But I don't expect us to go higher than where the news took us down from. That wouldn't really make too much sense. We could test it again and then go lower. I think we need to test 2 or 3 times to break out of it. But who knows? Because the DXY will lead everything, and it's a basket made up of more than just the Japanese yen. Yeah, likewise, just like the euro, dollar, the pound, I don't expect to take out 124. It could go up and test near it, but then fail. So that's why my thesis is that the DXY eventually takes out the descending line and starts to creep up with interest rates, with all interest rates. Having said that, let's look at gold and silver. Very strong today. Silver already up 2% in pre-market. Not that there is a pre or post market, but I'm not sure how to call it actually, because it just keeps creeping up and testing this 1820 zone, and it takes a lot of effort to break out of it. That's why it's had so much resistance. But to be honest, gold hasn't gone down, and what doesn't go down must go up. So thing is that the DXY hasn't broken out yet either. So maybe we test 1820, maybe we go a little higher, and this continues to act as resistance. And then as soon as the DXY breaks out of its descending line, then we start to flush again, and then we finally lose this zone, this pennant up here, which is kind of a bearish pennant, you know. The inverse related one is very bullish. I like to trade those on the breakout, but likewise here, when it breaks down below this ascending support, then it becomes bearish. And actually, I'll leave these in place because I still think this will happen despite the strength. We look at silver, even stronger. Silver's been very strong for some time, and I didn't think it would hit this resistance, but you know, for the last couple of trading days, I've thought it is a possibility, and it's getting more and more likely that it is a possibility now. But if it hits this, it's a definite sell for me. It's risky because I've sold quite a lot up here, and this move I haven't sold any more in several trading days because I've sold this zone, and I've got a certain allocation to my silver assets that I don't want to go below. I'm at my minimum quantity for the long-term trades. So if we go a little higher, 4% higher in silver, to me, that's when I can start selling again, because the allocation will be higher, but also because it's a major descending resistance. I think it's pretty identifiable. If we look at SLV, it would be the same as, it'd be the same as sort of hitting this zone here. It's $23 in SLV. I think that's what it would equate to. And to me, that's also a sell. I mean, it is a sell. It's just, next zone would be 24 and 25. It's $1 increments on SLV. It's getting very tough though to call the metals, because I think I just need to give them time to play out. And also I'm looking, I've already covered it, but you've got to consider the element of the DXY breaking out. What if this breaks out? What would happen to silver and gold? To me, they would break down. I'm looking at gold here, what would happen if DXY breaks out of it? This would break down and go lower, and basically look more like what's happened already to GDX and GDXJ here when it broke down. And what would happen to GDX and GDXJ since I'm here? If we break lower in gold and silver with the DXY breaking out of this descending, well, this would happen, exactly what I've already drawn. Break down here and there. The target's already in place. So I still will stick with that thesis, but I'm prepared for the opposite happening, which is markets going higher, especially gold and silver, which by the way have been outperforming the markets, gold, silver, and GDX and GDXJ. I mean, look at GDX and GDXJ, they're very close to their highs, a bit like the Dow Jones. So it's quite telling, but I'm still looking for a move lower. Anyway, that'll do for now. It's a bit of a longer video because I haven't done one in some time, but that's my thesis. Good luck. Let's see what happens.